And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. And of course, as always, it's with an eye toward helping you prepare not only for next week, but beyond. So, as usual, we are going to take a look at where the markets closed for the week, and then beyond, we want to get a feel for where there may be sector rotation that's continuing to shape up, where that relative outperformance is so that you can participate in that. And then, as always, we want to be aware of that bigger, broader picture. And that's something that I really do get into with my MEM Edge report that is coming out twice weekly. So from here, let's take a look. I'm going to go ahead and share with you some of those headline news that drove price action last week, as well as upcoming news for next week. We did see March CPI, and that's a very critical inflation data point that the Federal Reserve and of course investors are keeping a close eye on. And it did show that inflation is gradually slowing. That's good news. However, inflation does remain rather elevated. On Wednesday, the Federal Reserve released the notes from their latest meeting, and it was shown that FOMC officials are on the lookout for a mild recession later this year. And it's all about that bank crisis. And that is not what the markets wanted to hear. It was a negative yet muted response. We did get March producer price index data as well, another big inflation point. And we did see inflation slowing there as well. So on the inflation front, very subtle, but we are seeing it reducing, which is generally good news. However, retail sales data tumbled for the slowest period in 4 months. So that was not particularly good for some areas of retail. We did get earnings season beginning this week, and we are going to get more into this, but several bank stocks came out with above estimated earnings. And that was good news, certainly for those select bank names. And it could potentially fare well for earnings season going forward, because we did see a nice positive response to those above estimate earnings. Next week, more data coming out. We will see durable goods orders for March coming out. And then first quarter GDP data is going to be revised again. We are seeing GDP data. Last time that it was shown, it did come out as being reduced. That is all about this slowdown that is beginning to take shape in the economy. We also have additional inflation data. Core PCE data will be released next week. All of this taking shape prior to the Federal Reserve's meeting in early May. So let's go ahead, not waste a minute, take a look at these broader markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500. A couple of metrics I do want to point out and share with you is the fact that we are continuing this current uptrend that is taking shape with the S&P 500, finding support at this upward trending 10-day simple moving average. The S&P was up a little more than 0.5% this week, but we also have outside momentum with this RSI and stochastics in positive territory. So broader market-wise, we are generally in good shape. From here, let's go ahead and take a look beneath the surface. We want to see what is taking place among those 11 sectors in the S&P 500. So this is a 2-month daily price chart view. I've added an RSI, relative strength indicator. I'm going to go ahead and update this and share with you what is taking place. Many of you that watch my show each week, welcome back. I do want to share with you that we are seeing continued upside vibrancy in these more defensive areas. Healthcare up here at the forefront. I pointed out that downtrend reversal that shaped up last week, and we did see a nice continuation rally. It did outperform the S&P by a little bit, but we are also seeing consumer staples up here in the forefront. It didn't have a great week, trended sideways. We may get more vibrancy here next week, as certainly a couple of heavier weighted names are due to release their earnings reports next week. So beyond that, we can take a look at some of the outperformers Energy outperforming again with a 2.5% gain for the week. I will say not a lot in the way of underlying stocks within energy that are looking particularly attractive, but it certainly is noteworthy. And I talked about earnings season beginning last week with some of these big bank stocks coming in with good numbers. And here we are with a daily price chart of that financial select sector in the S&P 500. It was the top performing area last week, up 2.7%. Again, a lot having to do with several of these large money center banks that came out with very good numbers. From here, let's go ahead and take a look at some of these other areas that continue to remain in leadership positions based on their chart. However, they are wobbling a bit. And first up here is the technology sector, XLK. And we can see that it did pull back last week to this 21-day simple moving average, found support. And we are seeing a little bit of vibrancy later in the week as it attempts to regain that 10-day simple moving average. The technology sector was among the weakest areas this week. And as we move through this, I'll share with you some of those weaker areas that you will want to be aware of. So as we move through these sectors, we can take a look at some other areas that are potentially firming up. And this is consumer discretionary. And it is despite that weak retail sales data that I mentioned to you. XLY, consumer discretionary, was up more than twice the broader market indices, up 1.2%, and the group did manage to regain its 200-day simple moving average. And I will share with you some of the stronger or areas in that sector that are beginning to firm up as well. So from here, let's go ahead and take a look beyond the broader market sectors and look at some of these sub-industry groupings. I use these very selective ETFs that are really helpful in getting your arms around where strength is relative to that weakness. Again, a 2-month daily price chart view and strength to weakness in their according to how they are laid out here. So first up here, we can see a sector or sub-industry group. This is IHI, and it's the medical devices ETF. So we did see that move into healthcare. This is very in line with the sector movement, but it is an outperformer among the healthcare area. And medical devices is an area where you can capture growth. And I do have a number of names on my watch list that I intend to potentially add a couple of them to the suggested holdings list, given the continued strength in these medical device stocks. Also, as we move through, I did want to point out to you that the Dow Jones Industrial Average is the top performing index for the second week in a row. And we will get into that as it relates to where the strength is emanating and bubbling up in that industrial area. Brent crude oil up here at the forefront, up again this week, and all about reduced production levels. And then we're not really seeing a lot in the way of the oil demand. So we are seeing movement in the upward spike in the price of oil. But again, I'm not seeing any number of names or really that look attractive at this point in time. So let's go ahead and move on. Also in healthcare, IBB, this is the biotechnology ETF remaining in a nice confirmed uptrend. That is good news. And then we talked about technology underperforming. However, this is a chart of IGV, which is the software ETF that is very widely used. And we can see that it was mostly flat, but it did end the week up about 0.5 percentage point. I have about 3 software names on my suggested holdings list for my MEM Edge report, and they are all well outperforming the overall group. There are select areas in software that are faring well. So as we move forward, we can take a quick look here at the NASDAQ, which is also retaining its uptrend, very similar look to that technology sector, where it is in a back and fill with a later week rally that shaped up. So moving along here, I did want to share with you one area that we talked about last week that is continuing to show relative weakness. This is is SOXX, the software ETF. And we can see that it was flat for the week, struggling to maintain a presence above this 50-day simple moving average. It's an area that I'm certainly keeping a very close eye on because it had been a leadership area in January and then through some periods in February as well. We also want to take a quick look here at KRE, and this is the regional banking ETF. I talked about some of these major banks coming out with good numbers. It is not trickling. The good news there is not trickling down into these regional banks. I ran a screen earlier today looking for regional names that are beginning to perk up and trade above key moving averages with positive momentum, and nary a bank in sight. So still down and out for those regional banks. We can take a quick look here at gold, which had spiked to a near-term high before pulling back today. But overall, this uptrend remains in place. This pullback could be a buy point for these gold stocks. So from here, what I want to do is share with you some of those larger money center banks that reported this week, and we can take a look at their charts because there are additional banks that are due to report. Before I do that, however, I did want to share with you a view that can be really quite helpful at week end. This is a map of the S&P 500, and it's looking at the weekly performance, and those green areas are going to highlight sectors that are outperforming. I talked about these big bank stocks. Some of them are popping. Also of note is the fact that these larger Deere and Caterpillar are having significant moves, but we're going to look more further into that as we look at those Dow components. So for now, let's just take a quick look at the some of these banks that did report earnings. This is Citigroup. C is the ticker symbol. You can see that nice high volume. The stock gapped up 5% above these key moving averages. This MACD entering into positive territory, the RS in positive territory and heading higher as well. We also saw BlackRock. This is not a bank, but it is a large asset management firm in the financial space. And you can see this name also broke back above this key 50-day simple moving average, that MACD just dipping into positive territory, RSI trending higher and in positive territory. So good news there. Of note, I talked about names that are due to report next week. Now, Goldman is going to, let's take a quick look at JPMorgan. I would put that in the same category as Goldman in the sense that they derive a number of their assets from capital markets, trading, and so forth. Of course, JPM also has that credit card division that is helping their sales as well. But here we are with that nice gap up 7.5%, a huge move in the banking world. We can see this nice high volume. However, that MACD not quite up in positive territory yet. So from here, we'll just take a quick look at Goldman. They are due to report their earnings next week. And of note is the fact that this particular stock is also in the throes of potentially trading above its 50-day simple moving average. And that is going to be coming out on Tuesday. So also of note, we did see some other names that came out with earnings this past week, not just in that banking space. And I'll share with you a couple of those names as well. This is Fastenal, FAST, very choppy, not the best looking chart, but we did see a gap up in response to earnings, and it's in line with a move into some of these industrial stocks. We did see MSM report earnings last week, nice continuation rally as the stock is poised to break out of this nice base. And then another mover, I talked about consumer discretionary stocks outperforming the markets last week. And again, it is, as in most cases, going to be earnings driven. This is Delta Airlines. Again, not the best looking chart, but the company did come out with poor Q1 earnings. However, they guided higher and talked about being booked throughout the summer months, travel related. So a number of travel related stocks were on the move last week, and other areas as well on that positive good news. Not a big move, but here's Wynn Resorts as an example of a consumer discretionary area and stock that also picked up. So from here, let's go ahead and move over. I want to share with you that Dow components and the 30 stocks here using that 2-month daily price chart view. And I did add this RSI, that's a relative strength indicator. So we want to see where that relative strength is, but we will also drill down and take a look at areas in the Dow that are beginning to perk up. So up here at the forefront, we can see, again, defensive, no doubt, but Merck up here as it trends higher upon this base breakout, one of the larger, of course, pharmaceutical names that is continuing to come out with good news, positive momentum on that MACD and RSI. We can also take a look at McDonald's. Subscribers to my MEM Edge report will be aware of this stock. We did pick it up here upon this base breakout, and the stock continues to trend higher, the top relative outperformer among these Dow stocks. Also, Coca-Cola up here in the forefront as it is also continuing to bubble up toward this potential base breakout. Pepsi is due to report their earnings next week, and it has been another relative outperformer. In addition to their beverage division, a lot of these consumer staples that are food related are seeing real increases in growth in their snack divisions. So also wanted to point out to you Visa, which is really shaping up quite nicely, poised to break out of this nice. In fact, it did break out of this base on nice heavy volume MACD up there in positive territory. So looking quite constructive there. Procter & Gamble, they are due to report their earnings next week. Now, we did see this significant move from 138 up to 154, but this nice resting period prior to the release of their earnings, we could see a continuation move in Procter & Gamble. They're due to report next Friday. So let's go ahead and move down a little bit further. I will share with you two names in energy that are among the few that are shaping up nicely. This is Exxon, XOM, gap up in response to that oil production news. And we can see, which in turn increased the price of oil, which is good for these oil producers. We can see by and large, we are in a back and fill base formation here, RSI above 50 and your MACD, but net, we are more neutral than not as the stock digests this significant 10-12% upside move that it just experienced. Also, would be remiss to not share with you the industrial one area in industrials that are faring well. This is Raytheon, RTX, gap up into a nice uptrend with positive momentum. So I'm finding it interesting in my work that we are seeing real vibrancy here in the Dow Jones, and it's no longer, of course, that industrial focus. We have Apple, which had a pullback last week. Momentum stayed positive despite that pullback, and the stock is looking very constructive. So I do want to share also in consumer discretionary, another area that really picked up last week is athletic footwear. And here we are with Nike, nice higher lows, forming the right side of a base, poised to break out at that 130 level. So that's good news there. And I did want to share with you, we talked about some of these other names in industrials that are trying to reverse, not quite there yet. Here we are with Caterpillar. It had a very sizable move last week. I believe it was up 6.5%. And however, we can see that the stock has moved up above this 10-day moving average, but we're not getting really big volume. Your MACD is still languishing down here in negative territory, and that RSI is not positive. So despite the move away or into a potential uptrend, we certainly are not there yet. For those of you that are more inclined to be intrigued by names that are down and out and trying to reverse their downtrends. Of course, my work, I will want to get into them in this sweet spot area as they potentially move further into the forefront. Another earnings driver here, UNH, it is the heaviest weighting in the Dow. and we can see that it had a 3% pullback. This is all about earnings that were okay, not exciting. So investors did sell on the good news. But again, you will want to be on the lookout for this going into earnings when you see names that have already had a significant move prior to the release. The opportunity is really not going to be as great as in some of these more depressed names. We looked at those banks that were down and out. Any kind of good news is going to be more positively responded to. So from here, let's go ahead and take a look at some of these other companies that are due to report their earnings next week. And this is all about being aware of particular industry groups. I talked about semiconductors being underperforming for the last 2 weeks. We do have two heavyweight semiconductor stocks that are due to report next week. This is ASML, a Netherlands-based semiconductor company with very proprietary products. There are no other companies out there that can deliver what they are offering with the well, I won't get too deep into it, but the point of the matter is that this particular stock is holding above support. It is viewed as a bellwether name. This is the release of their prior quarter, so keeping a close eye on that. Also, Lam Research, LRCX, will be reporting their earnings next week as well. Not as healthy here. This particular stock has not participated as nicely in the move into semiconductors. Here we are with that nice rally in January, a nice beginning of March into the end rally. And we can see that LRCX has been a relative non-performer for the most part, but they are due to report their earnings next week. And then one other name that I did want to share with you that is a heavyweight and often can impact the broader markets is the fact that Lockheed Martin is poised to report their earnings next week as well. We can see it experienced this nice space breakout from which it is pulling back. However, your momentum remains constructive from there. I did want to also share with you one area within the technology space that normally wouldn't come to mind as a tech stock or a technology area, but we did see upside price movement in alternative energy names, in particular solar, not ready for prime time yet, but this is ENPH, Enphase. We can see this nice move up here for the week. We'll take a quick look at a weekly chart here, and it was up almost 9.5%. So this is all about analyst upgrades to the group. And we can see it's just now poking above this 50-day simple moving average RSI, now in positive territory, nice higher lows. It's on my watch list. We are early in the potential downtrend reversal phase, but note that this particular stock, when it gets going, it can be a very clear-cut outperformer. Another name that is a bit more interesting in the alternative energy area is Array Technologies, ARRY. You can see it's in a nice general uptrend here with that RSI and MACD in positive territory. We're not getting a whole lot of volume, but another name for the watch list. As we continue to move through earnings season, you will want to be on top of those stocks that are experiencing analyst upgrades. I pointed ENPH out. We can look at another stock last week that had a move. It's a list that most sites are going to share with you. Analyst upgrades, downgrades. You can see it on Market Watch or any number of financial sites. But here is a stock last week, DKNG, that had a nice upgrade and subsequently a nice response. So you will want to, again, be on top of that so that you can, as we go into earnings season, you will see analysts begin to put out these upgrades. And then in turn, you will see the stocks respond because oftentimes going into earnings, these analysts may be more tuned in. Another name that is due to report here, gap up. This is Cloudflare in the software security space. Nice uptrend taking shape there. MACD just entering into positive territory. Then, guys, that's it for this week. Everyone have a fantastic weekend. For those of you that haven't already, use that link below. You can try out my twice weekly MEM Edge report. We're entering a very exciting period for the market as first quarter earnings reports are going to be released, and then lots of cross currents taking place. And you will want to stay on top of that as recession fears are bubbling up due to weaker economic data. But then, of course, we have the Federal Reserve with their rate hike campaign still in place. I'll see you guys next Friday.